For only the fourth time in recorded history, the gold-silver ratio has crossed 100, meaning 100 ounces of silver will get you 1 ounce of gold. But what does that mean, and how can you and I profit from it? That's what I'm going to explain in this video with 2 charts and 1 tweet. So stick around. I think you're going to like this. But before we take a look at the charts, let's be aware of what happened the last 3 times gold-silver ratio went to 100. The first time was in 1933 during the Great Depression. The ratio went up to 132 ounces of silver for 1 ounce of gold, largely driven by economic turmoil and the collapse in silver prices relative to gold. So silver went down, pushing the ratio higher because gold was seen as a much safer asset in 1933. So in early 1932 and 33, the silver price bottomed at around 25 cents per ounce. And the US government actually intervened with the Silver Purchase Act of 1934. Silver climbed to between 55 and 80 cents per ounce, representing a 50 to 80% recovery from its lows. Then in 1991, the ratio peaked again at around 100, and during an economic recession, gold was seen as the more safe haven asset, and silver lagged for many years after. This is the 2020 chart. On the top, we've got the gold-silver ratio. On the bottom, we've got the actual silver price, and we see that in March 2020, kind of around when the lockdowns first started happening, everyone was panicking because of COVID. People were staying indoors, businesses were closing, everything was shutting down, and the markets were absolutely tanking. This is what happened. The gold-silver ratio went as high as about 117, so it definitely crossed the 100 line. Silver prices dropped, it says here about $12.50, but I do remember you could get silver for about $11 an ounce spot. In March 2020, remember everything's dropping, and a recovery then took place from March to September, or to July, to August, I suppose, but continued through September, where silver crossed the $25 an ounce mark and hit $27, almost $28, and jumped up over 122%. So that's the most recent example of silver doing very well after the gold-silver ratio hits 100. Now, why do I think silver is still cheap and a good buy? Well, let's look at silver over the past, get rid of this ad, over the past 6 months compared to gold. Gold has been performing really well, and I do own gold, but over the past 6 months, gold's gone up about 22%. There was that drop this week from the tariff announcements. Silver took a huge hit, going down 8%. I think it was down 8% in one day, and it's recovered. But in the last 6 months, silver's only up 3.6% compared to gold. And that's actually typical. Silver usually lags gold and doesn't outperform until later in the cycle. So still a good opportunity, in my opinion, to get into silver and even gold, but silver I think has the bigger opportunity. Now, if you look at in the last year, both of the metals are doing well. Gold up 36%, silver up 13.5%. And in the last 5 years, though, look at that. In the last 5 years, silver has actually outperformed gold, 109% versus 90%. And remember, in recent times, silver is underperforming gold in these few months. So I think there's still opportunity to buy silver. If you look at I don't know if it'll show the overall charts. Yeah, silver doesn't always outperform gold, but look at these three. These are kind of what the silver guys like to point to. Silver at $50 an ounce, $50 an ounce, and will it hit that again? That's what a lot of people are betting on, including, and here's the tweet, this guy, David Bateman, who took delivery of, I think it was 400 million ounces of physical silver, and he took a photo and posted it on X. And here's what David Bateman had to say. There's approximately 300 billion spent each year buying newly mined gold for investment purposes. Silver is only a $25 billion annual industry. If just $5 billion, which is 1.5% of the gold investment, went into silver, the silver price would go stratospheric. That's just 10 investors like me around the whole world. So what he's saying is if 9 other people did what he did and took physical delivery of silver, imagine what would happen. That means that a single country investing in silver could cause generational silver breakout or 10 large $500 million investors. So that's an incredible leverage there. And then he mentions, your silver investment won't have any counterparty risk if your bank fails. So imagine he's got this stored somewhere, maybe not even all in one location, but different locations across his properties. And here, this is why there's globally coordinated effort to suppress the price of silver and demand of silver. There's less above ground silver than gold in the world. It is essential for manufacturing. Silver is in a 5-year structural demand supply deficit. Its day is coming very soon, not financial advice. And I agree with David Bateman. Its day has not come in a while, but looking at these charts, looking how steep the decline is and the ascent, silver's day is for sure coming very soon.